Hey, welcome to the Aramir Roundtable. Today is the 26th of November, 2019. It's the couple days before Thanksgiving, so welcome. I have a special guest, Mark Ansel with Night Owl. So welcome, Mark. Nice to have you back.
Thank you, Tom. Glad to be here.
And I don't know if you have the disclosure or not, but just the normal stuff that Aramir is not a broker-dealer, investment advisor. It's for educational purposes only. Past performance is not necessarily indicative of the future results. And if you'd like to read our whole disclaimer, just go ahead and go to the bottom of any of our web pages, or if you're watching the recording, just pause it on the disclosure screen and have at it. So with that, Mark's here to talk to us about the Night Owl, which he's done before. So we'll put links to the old presentation and the recording. But I guess this is more about an update of what's changed and how you've evolved it over the last year or so since the last presentation.
That's right. And thank you, Tom, for that. Just for those of you who have not seen the earlier recordings, let me just very quickly summarize because we don't have a lot of time to cram the material in. Night Owl is a futures trading system. So if you're only an options trader and you're interested in Night Owl, you've got to upgrade your account at your brokerage to allow you permissions to trade futures contracts. Night Owl trades in two specific futures markets. One of them is crude oil. The other one is euro currency. I do not trade S&P. I do not take on new markets. The reason for that very simply is Night Owl is 100% manual, and it takes me approximately 6 hours, give or take, every day just to get the homework done for the next day. So adding a third market would make my day just impossibly long. Crude oil and euro have been with Night Owl from the very beginning, which was in 2011. Trading it every day. I've traded Night Owl at, well, now 3 different private equity banks. Those banks, given that they control their money, they are rather protective of their accounts and balances and so forth. So I'm somewhat limited as to performance that I can provide to you. I can speak in general terms, and I will put that this way because I always get asked this question. Night Owl provides you with 2 pieces of information about each market. It will provide you with the direction to play the next day, and it will tell you where to put your stop in case it's wrong. Night Owl also will provide what I call price arrays, and that's what you're looking at on your screen right now. You're looking at the November 26th price array for January crude oil, and I'll get into the nitty-gritty about that in a moment, but what you see are various lines of prices. And I've highlighted one that begins with the at symbol. I call that the at line. That is typically the first entry that Night Owl will seek in playing a market, the at line. Okay. When I devised Night Owl, originally it would work with an array and almost always would have a stop loss price that was 8 lines behind the at line. When I say behind in the case of a short, that means it's above. Think in terms of behind goes down on these arrays. I don't know if I have a long side handy just to show you what I mean. We haven't done a long in a few days, but here I'm pointing at the at line, and so the stop is always going to be in this direction on the underneath the at line. Okay, so what I want to show you what to do is how to read this. Oh, I didn't finish my previous point, sorry. Regarding performance. Night Owl does give the 2 items that I mentioned, the stop and the direction. So I am able to promote that Night Owl has more than an 80% accuracy in identifying the likely predominant move of the next day. I'm careful with my language there because predominant move is very specific. To have a predominant move, a market needs to go what I call a C, that's Charlie, a Charlie length distance. Here, we'll look at this at line. If an entry occurs at 58.05 to the short side, which is what this S means, we're going short 58.05, and market gets to 57.10, it has gone a C length distance, a Charlie length distance. That is the minimum definition in Night Owl of a predominant move. Very frequently, especially lately in the euro where the volatility has been low, market may not go a C length distance in one day, and then it needs to look at a multi-day analysis to determine what has been the predominant move since we last measured it. That's getting into nitty-gritty. You don't really need to know to trade it. I just want to be sure we understand definitions. So for Aramir subscribers to Night Owl, what I have adapted it to do is this. Again, we're looking at last night's post. I posted this at approximately, for whatever reason, these times are an hour off. I posted it at about 1800 Eastern time. And the advice was for today's session, the November 26th session, in January crude oil, if the last price traded on the, what's today, Tuesday, on the Monday session, it was 57.91 and we opened at 57.92. What this is telling you is if this opening price is inside of this range, this defined gap range, if it's inside, because I have to calculate this in advance, of course, so I don't know where it's going to open. But if the opening price is inside of this gap range, these are the lines we play. The at line is the first line that Night Owl will take on a limit-based order. And as you can see, we opened at 57.92, which is in between these two lines. Night Owl had a reason for not looking at the first line. It wanted to go with the second line, which I believe elected today. 58.56 is the hot. What? We opened at where? 57.92. So yes, 58.05 certainly elected. The high is 58.56. So anyway, Night Owl will take the first at line on a limit. I have a tilde line here with a little tilde symbol in front. That's for people who don't want to ever miss a move, because sometimes the at line will not elect. Because remember, the at line's always somewhere beyond the last price, the opening, the opening price. So 57.92 is where we opened, and we're trying to go short 58.05. Well, what if it didn't get to 58.05? What do you do? Well, personally, I do nothing because I don't chase markets. But for those who want to have a play every day, that's what the tilde line is for. You can take the entry on a stop or a stop limit at the tilde and target, presumably you would target something closer because your entry is worse than the at line. But let's just assume that we're only playing the at line. That is what I do. I only play the at line. I don't play the tildes. That's me personally. I'm not saying you can't. I'm just saying I don't because I don't like chasing markets. So I'm looking for a limit entry on this 58.05 line. What happens when I get one? This is what I advise the Aramir traders to do. It's on this line right here. Whoops, didn't mean to highlight all of them. It's on this line right here. Your stop will go 3 lines behind the at, so just count 1, 2, 3. So that's going to be your stop line, and we'll come back to that in a moment. And we're targeting B, Bravo, or beyond. Generally speaking, I advise Aramir traders to target B. This is, of course, where Night Owl has its highest rate of success because target B is the closest target. As you can see from these arrays, the higher the letter, the farther away the target. The risk, generally speaking, is approximately the same distance as it is to target B. So it's approximately a 1-to-1 reward to risk ratio if you're targeting B and if you're taking the at line. As we get further or deeper into the array, approaching the stop price, then your reward to risk ratio improves because you're still going for target B, but the dollar amount of risk is getting correspondingly lower. For example, if for some reason you didn't want to take the at, but you want a lower risk trade and you decide you're going to take this line instead, then your stop is still on this 58.45 line, but you're only risking the distance between these two lines as opposed to all the way from 5805. This is why I said that Night Owl provides you with two pieces of information. It provides you with the direction to play and where to place your stop. It's really up to you as the trader, which of these lines do you want to play for your entry? Because you have to consider two things. There are two different kinds of risk. Everybody knows the first kind of risk. It's the distance between your entry price and your stop price. That's your risk of loss. But there's a second kind of risk that very rarely gets a lot of attention. That's the risk of missing your move, or as an economist would say, it's your opportunity cost. That means, as I said earlier, if I want to take only limit entries and market opens at 57.92, well then I've got a risk of missing a move. Because what if market had gone from 57.92 only up to 57.95 and then dropped in the Night Owl direction? Well, I'm left on the sideline. I've completely missed the play. And that's why there's this tilt, by the way. It's for those people who never want to miss a play. So you as the trader, you know your own reward to risk comfort level. There's no way I can know that. Some players are perfectly fine risking 40 or 50 cents. Some are even comfortable risking $1 or thereabouts, which is what Night Owl used to do just whenever the stop was always 8 lines behind the at. That was approximately $1. Some are not comfortable risking more than 20 or 30 cents. They want a reward to risk ratio that's bigger than 1. And in that case, you might be the person who is only willing to take 58.32 in this example and put your stop on this line, risking maybe 15 to 20 cents. And you may only get 4 or 5 plays a month, but they have rather high reward to risk ratio because you're still going for at least target C. Target B, target Bravo. So it's really up to the individual trader. How much dollar risk are you comfortable in taking? Or to put it another way, what is your personal preference for a reward to risk ratio? And there's just no way I can know that. And that's for each individual. And that's why I provide these various lines in the array. Each of these prices, by the way, comes off of a square of 9 price table. So Night Owl is a combination of 2 elements. The square of 9 table is one of them. The other, which I have not mentioned yet, and we'll get into more just a little bit later in the presentation, is the concept developed at the Chicago Board of Trade in 1988, known as market profile. The stops in Night Owl are based on the prices of control that market profile calculates for every day. Again, I'm getting into nitty-gritty that you don't need to know to trade Night Owl or to take the nightly trade advisories into your account. I'm just giving you a very quick overview of where these numbers come from. Let's focus for a minute on the stop line. I said we would come back to it. You as the trader have another decision you need to make. The simplest thing to do is to say, well, I'm going to play the at line because that's where Mark is taking his first entry. And I'm going to play the stop line because that's what the advisory tells you to do, 3 lines behind the at. And I'm going to target B because that's approximately a 1-to-1 reward to risk ratio. And it has almost an 80% likelihood of hitting on a daily basis. And by the way, these statistics go back several years. And just as a quick aside, since October 1st of this year, in other words, not even the last 2 months, what is that, maybe 7 weeks, Night Owl has called its direction correctly on 40 of its last 43 calls. And these are live calls. These are not hypothetical back testing. These are the calls I make the night before, and 40 of the last 43 have ended the day in profit at target B. If market doesn't get to target B at all, like it did not yesterday, excuse me, like it did not yesterday with Euro, then I have to put out an advisory before the end of the day, take your profit here. It doesn't look like we're going to get to B. In fact, Euro looks like that again today. It's only traded about 15 ticks or so. Anyway, so Night Owl has a high probability of getting to target B in the recommended direction. And again, if you're going for C or D or E, well, the probabilities go down just because the price is farther away and more things can happen to disrupt market, because consider that these prices, these arrays are good for 24 hours, well, 23 hours from 6 p.m. Eastern till 5 p.m. the next evening. So you got 23 hours where this is playable. And if you want to go for target F all the time, it might get there 3 or 4 times a month, and then you hit a home run. But why not take your contracts off at B and maybe play a trailing that seeks F or something like that, or play the big CL contract to B and then maybe play the QM, the mini contract, to F. I mean, there's lots of different things you can do to maximize your own personal profitability on Night Owl. So I'm just giving you the very basic here. The basic, simplest thing would be to take the add entry, target B, and put your stop at the stop line. But like I said a moment ago, there's another decision you need to make, and that is what I call fading. Keep in mind that these prices come off of a square of 9 price table. Night Owl has calculated them from 0 all the way up to 130 some thousand. So there's definitely a lot of them. They don't occur every penny. They don't occur every 5 cents. It depends on where you are on the table. In the case of current pricing on crude oil, as you can see, it tends to be between maybe 10 to 17 cents on the entries. They do not occur at the exact distance each time, because square of 9 is not a linear mathematical relationship. So there tends to be slight differences, slight variances between one line and the next. Like we can see here, that's 12.5 cents. There's one that's 15 from 70 to 85, 10 from 85 to 95, etc. So you have to pay attention to that little detail. But getting back to this idea of fading, realize that square of 9 has been around since the days of the ancient Egyptians. They used the square of 9 to build the pyramids. Before the days of slide rules and logarithms, they used the square of 9. So it's actually an ancient engineering concept that kind of gotten lost over the centuries since then. But it works well with natural phenomena, and market is a natural phenomena. So I adopted the square of 9 into Night Owl in the very early days of its development, 2011, 2012, something like that. So I've used it for a long time. Actually, I used it before Night Owl. I've used these for a very long time. So my point is, I'm not the only one who uses them. Square of 9 numbers are were fairly popular in the pits when commodities traded in pits. I've been trading commodities since 1997, so there were still a lot of pits around back then. Not so much so anymore, but some of those pit traders now trade on the internet, and they use square of 9. So the issue is, given the popularity of using square of 9 prices, big dollar traders don't like to miss moves. If I've got a big dollar trader who's subscribed to Night Owl and he sees that my ad is at 58.05 on a short, he's not going to put his price at 58.05. He's going to front run it. He may put it at 58 even if he's trading QMs, more likely he's doing CL, but he may put it at $58. He may even put it at 57.98 or something like that. He's going to front run my price. And if that's the area where market turns, if the at is so precise that it predicts approximately where the market will turn, which it does maybe half the time, give or take, you may not get filled if you do not fade your price. So I recommend to Aramir traders of Night Owl, they should consider, I can't tell you to do this, but consider fading your prices. So for example, instead of shorting 58.05, short $58 or maybe 58.02. I'm using the QM pricing, as you'll see here in the price array. These are all QM prices. I'm not going to go into why I do that, but you will always see crude oil posts in QM prices. So if you're trading the CL, you know, you can still put your entry at $58, 58.05, 58.03, you know, anywhere in this 58 area. But I'm strongly recommending that you fade your entries by at least a couple ticks, fade your targets by at least a couple ticks. So instead of taking an exit at 57.47, what if market turns just before it gets there, like at 57.50? You'll kick yourself because you didn't fade your price. You were holding out for that extra tick or 2.5 cents. Market turns and goes the other way, and other night owl traders have taken their profit, and you're kicking yourself because you didn't take yours, and now it's disappearing on you. Thirdly, fade the stop. For the same reason, these prices are so heavily used, they are so popular among the population of traders, and however many tens of thousands of crude oil traders, there's a good percentage of them that use square of 9 prices. So that means that these square of 9 prices will get a lot of attention. And in slow days, like we've seen the past couple of days in Euro, what's going on? Market's not going anywhere. So you got the front runners that are just seeking out these stop prices to take you out, and then market will turn and go the other way and take somebody else out. We see this all the time on choppy days. So try to avoid that by fading your price. Instead of putting a stop at 58.45 in a short play, consider putting it at 58.50 or 58.55. Just get it out of the way. And you'll avoid many stop outs, or in the case of a target, you'll be sure you get your, I guess I can't say sure, but you have a greater likelihood of getting your exit, just in case market does not get quite there to target B before it turns around. Personally, what I like to do, I always take my entries on limits because I don't like slippage. This, again, is just me. So I want to control my slippage as much as I can. I will take an entry on a limit, but I will use an MIT for an exit, just to be sure I get out, and I'll take that slippage. There are some platforms that don't allow MITs. One happens to be at the bank that I recommend for those who want to trade private equity money and not put your own money at risk. Night Owl does make a recommendation to a bank. Once you have subscribed to Night Owl, I can tell you who that bank is. Otherwise, you need to subscribe first to the Night Owl service. But at that bank, you can trade up to $150,000 of the bank's money. It will share profits with you on an 80-20%. I strongly recommend to all of you to take advantage of that. Why put your own, Tom, are you there?
Yeah, I'm here.
Oh, I just got a warning on my screen that said my internet connection has become unstable. I don't know what that means.
Yeah, you cut out for a second or two.
Okay, well, I was saying to the group that I strongly recommend that you take advantage of the bank that Night Owl refers you to. Trade their money. They will let you trade up to $150,000. You get to keep 80% of the profits. They take 100% of the risk. Meaning that, you know, if you blow up the account, they're not going to come after you. Their risk parameters are very tight. They allow up to a 2% daily loss limit. So that's a pretty tight risk. And I've designed Night Owl to take that into account. The stop that I personally like to play when I trade is half of that daily loss limit. So I rarely will take a trade that's more than $1,500 on 150. That's a 1% daily loss on a platform that allows you up to 2. The thing is, if you hit that daily loss limit, the bank will basically take the money away from you and you have to qualify for it all over again. And the qualification process takes a while. So be sure of that. Be sure that you pay attention to that. Be that as it may, I strongly recommend, even if you want to trade your own money or supplement the bank's money with your own money, do the tryout for the bank because it will improve your trading skill. keeping inside that 2% daily loss limit is not easy. It's just not. It's a very tight parameter they will place on you. And the penalty for hitting that is pretty severe. Like I said, they will make you start over. Some banks won't even let you, you have to wait for a year before you can come back. This bank will at least let you start over, but you have to qualify all over again, and that qualification process can take months. So be aware of that. But otherwise, I strongly encourage you to trade the bank's money. Let them take 100% of the risk. You get 80% of the profit. Okay, let's get back to what I was saying earlier about market profile and prices of control, or points of control, POC. The difference between Night Owl and the videos that I made for Aramir, I guess it was about a year ago, give or take. Back then, I was still developing the updated stop loss calculations. I wanted to get away from always using a fixed stop of 8 lines of risk. Now we have to pay attention every night to my post because this number here changes. Last night it was 3. It may be 4. It may still be 8 sometimes. I think the lowest I've ever used since I began doing this earlier in the year was 2. That depends on where previous market profile prices of control happen to be. Again, you don't need to know where they are. I'm not going to tell you how I determine them because that's proprietary to my Night Owl calculations. Just be aware that this number here that tells you how many lines to risk, it's not just a number I've pulled out of the air. It has to do with where previous points of control happen to be. And something that I've observed when I've been working with market profile, which doesn't not go back to 1998, it goes back to 2012. And over the years that I've been playing with market profile, I've discovered that these previous POCs, prices of control, they act as terrific interference lines, much better than the routine pivot lines or projections of potential support and demand, drawing your line that connects 2 highs or 2 lows and tries to come up with channels or using Donchian channels. None of that works as well as POC. POC is a fabulous indicator of a likely place a market will turn. And therefore, if it's a likely place a market will turn, it makes it an excellent number to use for a stop. Just put your stop a little bit behind that price of control, and chances are market's not going to get to that stop. That's why this number changes every night now, because it tends to be a little bit behind whatever previous POC is on my price chart or that Night Owl has calculated. So that is the major change between a year ago and now. And what this will allow you to do, because instead of risking 8 lines, which is almost $1, we're risking 3 lines, which with no fading is 40 cents. My play here locally last night was risking 55, again, because I faded my entry and my stop both. I'm taking less dollar risk, so I can do one of 2 things. I can play the same number of lots, and I generally do things in groups of 3, so I can play 3 lots like usual, or I can play 6 lots and have approximately the same dollar amount of risk that I would normally have had back in the days when I was doing 7 to 8 lines of risk. So you can manipulate your trading a little bit in that way. Always keep your dollar risk the same and just improve your reward to risk ratio by now you're going for a bigger profit for the same dollar amount of risk, or you can use some flexibility in your lottage, keeping your dollar risk the same, but increasing your number of contracts and potentially go for more profit that way. That's up to you. I can't make that decision for you. And I have to admit, I'm not always consistent with that. Sometimes I will keep the lottage the same. Sometimes I will keep the dollar risk the same. it kind of depends on where I am during the month, and it's what are my own personal goals for that month. But at least you now have that flexibility, as opposed to always playing 8 lines, always risking $1 or thereabouts. I don't have the euro array up, but it looks the same, except of course the prices, instead of being in dollars, will be in the euro pricing of ticks. With crude oil, you've got on the big contract, you've got $1,000 per dollar. In the euro contract, you've got $125,000 per tick, $1,250 per point. But it works exactly the same. It will show you the at line, whether we're going long or short. It will tell you where target B is. It will tell you the number of lines to count behind behind the at to get to the stop. So these arrays work the same regardless of the market. Something I like to do, especially when I've got few lines between the at and the stop, in this case 3. So if my stop is here, and let's just say I'm going to fade it by 6 ticks. 6 ticks on the QM is 15 cents, so stop would be at 58.60. I've got 2 or even 3 additional lines that I can play in front of 58.60, because the at is where a market frequently will turn, but it's not perfect. Nothing in nature is perfect, and it may go on. It may hit the 58.20. It may hit the 58.32. It hit all of them this morning. It hit all 4 of these lines, did not stop out of the faded price. And I guess I just gave away where my fade was, because market's high was 58.56 and my fade was behind that. And then it went and hit target B. So Night Owl got a win. So I can't emphasize this enough, folks. So many traders play the square of 9 prices. You've got to fade them. If you don't want to get hit by stop runners on days where there's little volatility like today, you've got to use faded prices, because otherwise they know where these numbers are. They know where 58.05 is and why 58.05 is important, or 58.45 as a stop. So they're gonna seek out the stops at those prices. So you've got to fade and put them a little bit out of the way. Put your prices a little bit out of the way.
So when you're fading the stop, you put the stop so it's hits sooner or later?
Oh, it might always later.
Later.
Always later. Yeah, definitely later. I'm getting it out of the way of the market. So yes, if it gets hit anyway, sure, I've just taken a bigger loss than if I had used the system price, the 58.45 in today's example. But again, bear in mind that Night Owl has the high prediction or accuracy rate in predicting a market's predominant move. And recognizing that, you want to get and knowing where the previous POCs are that are containing the market, because that's basically what's going on when you get these range-bound markets. The market is being contained by previous POCs. Eventually, it's going to break out of one of them. You may not know which one it is, but Night Owl helps us knowing that by telling us, well, the short side is the higher probability for hitting target B. That's what Night Owl is telling us, Tom and folks. Night Owl is telling us which side, long or short, is more likely to get to target B first. That's it. It's not saying that, crude oil is long, crude oil is short today on the 26th, and so today's more likely that we're going to go to target Foxtrot or Golf, $2 or $3 away. Sure, that could happen. Neither I nor anyone else can really predict which days are going to be the home run type days. So it makes a lot more sense to target B, because again, the statistic is Night Owl gets to target B almost 80% of the time when it gets the direction right. And it gets the direction right 80% of the time, or since October 1st, 40 out of 43 calls it got it right. So that's where the smart money goes. And then, like I said, if you want to play multiple lots to get to target B, and then play maybe one lot as a trailer, either with a trailing stop or even target a farther away stop like C or D, or I mean, if you want the home run, go for F, and you'll get that maybe 3 or 4 times a month, fine. But the bread and butter night owl play is the at line for the entry, the stop based on whatever the number up here tells you, and that's of course based on where the previous POCs are, and targeting B, all faded prices. So in the case of a short, a faded entry will put the price in front, so it's going to be less than. The target faded is going to be above, because you're coming from above. So the faded target B here might be 57.50 or 52. The stop fade is always going to be behind. So instead of 58.45, it might be 58.50 or 52. I'm using QM prices again, of course, because that's what Night Owl is based on, and a tick in QM is 2.5 cents. But if you want to use the CL, and I realize almost everybody trades the CL, you can convert these prices easily enough to the nearest penny instead of the nearest 2.5 cents.
And do you have rough, I know you said that the target B is about 80%. Do you have the numbers for like A, C, D, etc.?
A is going to be over 90%. And for those who want to sachet, and I haven't mentioned sachet, I'm guilty of that. I don't sachet much anymore just because it requires so much work. But using target A as a sachet. So the idea with target A was this. If our entry was, and I'm not going to use fades, I'll just use the system prices to make the discussion a little easier. But if we were going to go short at 58.05 and we're going to target B, which is 57.47, what if market then gets to 58.20? The sachet would be this: you would take a lot at 58.20 and target 57.97, and you pick up a little extra profit that way. And that happens almost 90% of the time when Night Owl's got the predominant prediction correct. So if it gets to 58.32, then you're targeting 58.07, and you're just kind of nicking away at the market, just going for these little additional profits. But it is intensive. It requires a lot of additional manual. It says my connection is unstable again. And
Yeah, again, you cut out for a second or two, but you're back.
Okay, it's a wireless connection, so maybe that has something to do with it. All of the routers in the next room. But anyway, so that's the idea of the target A. The target A is it's for sachaying, for taking those little nicks out of the market. Target C hits a little more than 50% of the time. I haven't measured it recently, but historically it was in the 56% area. Target D was in the upper 30s, target E was in the middle 20s, and I'd never calculated below, but F would probably be somewhere around 18. And because after all, market only goes this distance, maybe from 58.20 to F 56.07, that's over $2. In crude oil, it's only going to do that a couple times a month.
It's a big move.
It's a big move, and bear in mind that why I like Night Owl so much. Night Owl, after all, is a reflection on my own trading style. I am not an in and out kind of person. I don't like sitting at a screen all day long. The homework takes 6 hours. The last thing I want to do is spend 20 plus hours a day sitting in front of my computer, either playing ins and outs all the time, and then spending 6 hours doing homework, or doing essentially what's a swing trade on an intraday basis. I'm playing one direction per day, typically. Sometimes, and be aware, sometimes I will come out with a post in the middle of the trading day to take a new setup. I don't do that very often, only because it takes so long to identify them. But sometimes I will do that. But typically there's going to be one of these posts per day that gives you an array that's good until, I recommend everybody exit at 4:00 p.m. Eastern time. The bank will require you to be out by 4:10 Eastern time if you decide to go with the bank. But theoretically, the prices are good until 5 p.m. close of trading. Um, so Night Owl is, as I said, an intraday swing trade kind of strategy where you take an entry and then you just basically let it do its thing. And you got to recognize that markets don't go in straight lines. So if you enter at this 58.05, it may go your way down into the, let's say, 57.60s. It may come back, go above 58.05, and maybe elect this line. And it's going to go back and forth. You have to be willing to sit through that and have your faith that that stop line most likely will not get hit. And it may take, the quickest trade I ever recall getting from entry to target C got there in about 25 minutes. But you can have days where this will be on for 23 hours until almost 5 p.m. the next night, and it still doesn't get to be. That's the way Euro was yesterday. It never got to be. There just was no volatility. So you have to recognize that you may be in these trades for a while, and if you're going to sit in front of the screen, it's going to churn your stomach to watch market go back and forth and back and forth. Some people, they want to play those very small moves. I don't, only because, again, the homework takes so long, and I don't want to sit in front of a computer screen almost 20 plus hours a day. So this strategy is a good strategy for somebody who is like me, that they don't want to or maybe can't sit in front of a computer screen all day. We have a trader who operates a retail store, sells camera equipment, photography equipment, and maybe it's more accurate to say digital imaging equipment, because I guess they do copiers and other things, scanners. But anyway, so he has this retail store, and he has to attend to his customers and inventory and so forth. So he can't sit at the screen all the time. And so he elected to go with Night Owl because he can put the trades on when I put the post out every night. I used to say that I would put the post out by 6. More typically now it's 7, because the calculation of the stops using the previous POCs does require more time. So usually now I have my post by 7 p.m. instead of 6. But anyway, he gets the post in the evening. He can put the trades on. He goes to bed. He goes to his store the next morning, and if he puts his orders in as OSOs, so that he's got the entry working. He's got the target and the stop prices working based contingency. If the entry elects, then the exit prices, the stop and the target, then go into the market. So it's ideal for him, and I'm kind of like that too. I use OSOs for every order that I do. With the live order, of course, is the entry price, and if the entry elects, then the stop and the target become live orders, and that's the essence of an OSO order. And your platform certainly ought to have that as an option for you. If it has the MIT option, use that for your targets. You can use it for your entries too. I don't. I like to control my slippage on my entries, like I said, but I like to be sure I get out, and that's why I'll use the MIT for the exit. So this is the essence of Night Owl. You're not typically playing for a few cents 10 times a day. You're more typically playing for a target B moves approximately 60 cents. You're playing for roughly 60-cent move, maybe once a day, very occasionally twice a day. And again, if you want to go for the home runs and use a trailing contract for that, then a couple times a month you might get the $2 type move. And those are cause for celebration, but just keep stay realistic about it. It's not going to happen every day, and just because I've said this now doesn't mean it'll happen tomorrow. It may not happen again until, who knows? Nobody can predict this. It may not, the next one may not happen until the middle of December, but they do come along occasionally. We've only got 15 minutes left because I've got to start the homework by 1:30. Otherwise, I have no chance of getting it done by 7. And I need to emphasize something else that has changed since a year ago. It has to do with pricing. I want to be sure everybody knows that Tom and I have implemented holiday pricing for Night Owl.
All right. Good point.
Well, yeah, this is one of the reasons we wanted to do this roundtable today, was to be sure everybody knows that the prices that were on the videos from a year ago, those are the regular prices, but we've discounted those prices through the holidays, actually through January 8th. So we're even including Orthodox Christmas in this because that occurs on January 7th. So through January 8th, you can subscribe to Night Owl at reduced price. We've knocked the price down $100 per month on the monthly subscriptions, $200 per month, $200 per quarter on the quarterly subscriptions. And I don't even remember what we did on the annual. I think it was $400 or maybe $500.
It's 500
but
on
anyway,
the annual.
Okay, $500 discount on the annual subscription. Take advantage of those, folks, because here's the thing with those discounts. They lock you in. So if you subscribe for, let's say, a quarterly Night Owl subscription, the regular price for that was $9.95. The discounted price is $7.95. Well, when that quarter is up, you're still locked in at $7.95. It doesn't go to $9.95. So we're giving you that benefit as well. But lock yourself into the lower prices now so they don't go up on you somewhere in the future. One other thing, I occasionally get asked this. I realize that people like to see things in action before they commit. I've never done this before, so this is kind of new for me, and I don't really know what to expect. But I'm going to do this for tire kickers. For those of you who subscribe to Night Owl between now and the end of November, so you've got a little, well, let's
Couple more days.
Yeah, let's extend it out, Tom, because we originally thought we were going to do this roundtable last week, and so the end of November was giving people a week. So let's take it to Friday of next week, whatever that date is, the 6th. Okay. So take note, Tom, because you're the administrative guy.
Yeah, I got to get it all set up.
Yeah, who controls the billing and so forth. Okay, between now to the close of business, December 6th, so that's 5 p.m. Eastern Time. If you subscribe to Night Owl, your first 5 winning predictions will be at no charge. What does that mean? It means, here, let me scroll up a little higher so you can see exactly what I'm talking about. This is the notice that I put out as a matter of routine whenever market reaches target Bravo. This is from earlier this morning, 10 o'clock this morning, give or take. They post the time every 15 minutes. Profit target attainment, price array deactivation. What this means is we got to target B. Night Owl got to target B for the 40th time out of the last 43 calls. When it gets to target B, the array posted from the day before no longer is active. That's what this is telling you. Target attained, price array is now deactivated. With the attainment of profit target B, the previous night's array is no longer valid. In other words, Night Owl is done for the day. And you're not going to see any more posts from me until the next day's post. Okay, so each time Night Owl gets a target B during your subscription, we will take note of that. And once there have been 5 target B attainments, then Tom will bill your card, your MasterCard or your Visa or whatever else Tom accepts, I guess, American.
Yeah, they're all of them, yeah.
Yeah, okay. So once Night Owl has hit target B 5 times, then Tom will bill your card at the discounted rate. Am I correct in going through this? I mean, this is the process you follow?
Yeah, that'll be fine.
Okay. So that's how we're going to do this, people. Now, bear in mind, this probably won't happen today because Euro's not going anywhere, but it's possible that when Night Owl has made a Euro call and a crude oil call on the same day, we may get target B in both of them. So that's going to count 2 times, not once. So we're measuring the number of times market hits target B. Whoops. We're measuring the number of times market hits target B. So if it happens twice in one day, that will count as 2 of your 5 times. Night Owl typically only has one play per day. That's definitely not a rule. It's just the way the numbers work. Occasionally, Night Owl has no plays per day. Sometimes it has 2 plays per day, like it did yesterday. I forgot if it was yesterday or Friday. But anyway, if it hits target B on both markets on the same day, that counts as 2 target B elections. So you're allowed 5 target B elections before your MasterCard or Visa or whatever get charged for your subscription. I wanted to be sure we got that in because I've never done this before, and so it's kind of new for everybody. So take copious notes, Tom.
Yeah.
Okay.
I did have another question. Do you have a rough idea of how often it hits the stop line?
Well, it gets it right. It gets to target B approximately 80% of the time. So that means 20% of the time it's not getting to target B. That doesn't mean that 20% of the time it's hitting the stop line. Sometimes it doesn't get to the target B. Sometimes it takes a loss, but not at the stop line. Actually hitting the stop line occurs a little more than 10% of the time.
Okay. Just wondering about that.
Yeah. I like to focus on the reward to risk ratio. And the reason that I got so deep into analyzing stop placement over the past year and ultimately settling on the previous POCs to help me identify where the stop should go. If we're targeting B, again, a typical target B move in crude oil is going to be around 60 to 65 cents, depending, of course, on your fading and exactly where the square of 9 prices are, but almost always it's in the 60 to 65 cent area. So yeah, we can have a dollar risk, which was the old 8 lines. You can have a dollar risk to make 60 cents, and if you're getting it right 80% of the time, you're still coming out ahead on what the statistician would call the expected return, because the expected return is the product of the accuracy percentage in calling the direction correctly times the reward or the risk that you've incurred, that ratio. So a 60%, a 60 cent profit with a 75 to 80% accuracy and a dollar risk still makes money. It's just not as comfortable, not as desirable as that 1-to-1. And that's why I wanted to come up with a better stop technique. And that's the major improvement in Night Owl over the last year, is the placement, the identification of where the stop should go, as opposed to just an arbitrary 8 lines. It keeps that reward to risk ratio in the 1-to-1 area. Now, we don't see this in today's post, but sometimes there's just no previous POC anywhere nearby to the opening price. In those instances, this risk recommendation here will typically say the at stop loss 5 lines behind the at line if you're targeting B, 8 lines behind if you're targeting C. And again, there are occasions when there's just no previous POC anywhere nearby, and those tend to be the days when market decides it's going to make a bigger move because it's not trapped by any previous POCs. So be wary of those. I mean, just keep a lookout for them and adjust your wattage accordingly. I do advise on days like that, where we have the 2 instructions here, 5 lines for targeting B, 8 lines for targeting C. If the nearest stop hits and then market turns and goes in the Night Owl direction, there's nothing that says you can't take these entries as market coming back. So for example, if the stop for last night was at 50, how high did we go? We went up to 58.56. If the stop last night had been 58.55, and probably some Night Owl traders put it there because that was a 10 cent risk, that's 4 um, 4 ticks, so that would seem like a reasonable fade. 5 ticks would have worked, 4 did not. But if your stop got hit and then at 58.55 and then market starts coming down, coming your direction, there's nothing that says you can't go short on a stop at 58.32 and maybe add another one at 58.20. Because now I don't have the 58.55 line here, but we can see that on this line, if you take a stop entry at 58.45 after market has been up to 58.55, okay, you're going to target 57.87. If you take your entry here, you're going to target 57.20. Correct, 57. What is that? 72. So there's nothing that says you can't do that, because just keep in mind that accuracy percentage of Night Owl is in the 80s. So chances are, even if you get stopped out, if market comes back and elects this price, either it's going to go in your direction or it's just going to be range bound for the rest of the day. It's a decent play to take these re-entries on stops if market happens to come back your way.
A quick question. If somebody's considering subscribing, but they only want to do one market, is there any pros or cons to crude versus zero?
There's no pros or cons. Just keep this, because here, I'll quote you the numbers because I keep track of this daily. Okay, these numbers are since I brought Night Owl to Aramir. They are based on my daily posts, and just keep in mind I make my posts the night before, so I have no idea at the time I make the post what market's really going to do. But since I brought Night Owl to Aramir in October of 2018, 6E has called the direction correctly 82.9% of the time. It's called the CL direction correctly 84.2% of the time. So it's only
Pretty close.
It's really close. There have been 123 euro calls. There have been 114 CL calls, crude oil calls. So right now there are slightly more euro calls than crude oil calls, and I can tell you the reason for that is we have been range bound in crude oil for the last month between roughly $52 and $58, because there are so many previous POCs in that range. Eventually it will break out. Whether it'll go up or down, I don't know. I mean, my homework will tell me that on a day-by-day basis. But other than that, it's not like I can say, oh, 3 weeks from now it'll be in the 60s. I don't know that, or neither does anybody else. But anyway, to answer your question, statistically, there's no significant difference between choosing one market or the other. I advise you to take both only because it's a rare day when Night Owl will recognize setups in each market on the same day. More typically, we'll have crude oil one day, we'll have euro the next day. Maybe once, and there's no rules to any of this. It's just based, seat of the pants estimates based on years of doing this. That maybe one day, sometimes 2 days a week, both markets will have plays. And likewise, maybe one day a week, neither market will have plays. So if you want to maximize your subscription dollars, because I don't double the subscription based on one market versus two. It's just a relatively minor increase to go from one market to two. Subscribe to both. Subscribe to both. If you had come to me a month ago and said, well, I want to subscribe, but I only want to subscribe to crude oil. In the last month, which is what, 20 trading days, give or take, there've probably only been maybe 6 crude oil plays, just because of that range bound thing I was talking about. In fact, I'm looking at the numbers here. We went from October 18 all the way through November 4 with no crude oil plays at all. So however many days that is, trading days, looks like it's maybe 12 or so, give or take. I'm not able to predict when that's going to happen. Luckily for the traders who, or subscribers I should say, who play both markets, they got euro calls almost every day, and there was only one that missed, November 4. In fact, euro has been correct every day since November 4th, so it's gone almost a month. The last incorrect crude oil call was back on October 9th, but just keep in mind that there were many days when there were none at all. So I advise you strongly, take take a subscription in both markets. It's only slightly more to add the second market, and you'll get plays almost every day.
Right. All right, Mark. Well, I know you got to get to your homework, and we're right at an hour anyway. So
Okay.
thanks so much for updating us on Night Owl.
You're all welcome. I appreciate all of you coming by. I'm available for anyone who has questions. My email address with Aramir is nightowl, it's all one word, nightowl@aramir.com.
Yep, great.
Okay,
Well, thanks, Mark, and thanks everyone for coming. I'll get this all set up for the that special offer, and yeah, I hope you subscribe and get some profitable trades under your belt.
good.
All right,
Good luck,
thanks, everyone.
Good luck, everyone. Thank you for joining us.
All right, bye-bye.